Good evening, Tradespooners. Here is today's pick for January 9th. We're going to be taking a look at taking a short position in Abercrombie & Fitch. ANF is the ticker symbol. And this is for the January 9th, 2014 pick. Let's take a look at the risk and reward valuation that we have with our Tradespoon analysis. It's at the mid-range of 5. And you have the value momentum on the low end is a 2. Let's take a look at the price action here. So for you stock traders, we're going to be looking at the close price on the 8th at $32.92. We're looking at a 52-week high of $55.23 and a 52-week low of $31.14. We're trading right above those lows on the 52-week range, and it's been in a pretty bearish trend over the last few months. For your option traders, we're actually looking at the volatility, and right here we're looking at the implied volatility right around 34, 35 range. We're at 34.37. That's on its 52-week low. So there doesn't seem to be a heightened expectation of potential movement at this stage as far as implied volatility. And historic volatility is right around 27. That's not here right now, but we'll take a look at that in a minute. Again, on its 52-week lows. We're actually going to be taking a look at March options on the expiration date. So option traders, we're not looking at February here. We're going to be looking at March. So let's scroll down. On the stock trade, we're looking to sell short ANF at $32.92. That's our entry price. That means that our target gain is going to be $6.20 lower than our entry short, which would get us to a point at $26.72 where we will put that buy to close order in $6.20 lower. So that $26.72 limit order, good till cancel. We'll have a stop loss order above our entry price of $32.92. In other words, $6.20 higher. So we'll have a buy stop at $39.12. And your brokerage firm should offer a conditional order called an OCO, one cancels other, and you can have both those orders working. Let's take a look at the option trade. And as I had mentioned, we are now looking at March options, so we're not looking at February. So we're going to have some time here. And that's important because there's a couple things I want to bring up on the as far as any key events that are going to be coming up. First of all, we're looking at buying the March $32 puts. These are slightly out of the money compared to what the stock is trading right now, and they're currently trading for $2.05 per contract, or $205. That is going to be our max risk per contract. So again, use prudent size management. Our target gain is going to be $2.05. So we're going to put a sell limit to close out this put at a profit of $4.10, somewhere around that range. Now, for you spread traders, we're going to be taking a look again in the March expiration month. We're going to be buying the March we're going to be selling a call spread. Now, this is a credit strategy. If you are not familiar with credit strategies, use the virtual trade component to start building up your knowledge and experience with trading these particular transactions. We're going to be looking to sell the $34 calls. These are a dollar and some change out of the money. And selling the $33 calls, which are just almost at the money, and we're going to sell those for $2.33. Now, we don't like to have that unlimited risk to the upside in this case for selling those calls, so we're going to buy some protection up top. And we actually talked about a similar spread but with puts yesterday, and we're going to buy the March $34 calls for $1.87. That's going to reduce the credit that we take in, so our total credit for this dollar credit spread, the difference between 33 and 34 is $1, is going to be a 46-cent credit. That's our maximum profit potential. And again, folks, if you have never traded this, use our virtual trade here at Tradespoon. Our max risk is not going to be the 46 cents we collect, but the difference between the strike prices minus 46. So you're basically looking at a 54-cent risk per contract. Now, if the stock stays below between now and March expiration, $34 at March expiration, we get to keep this 46 cents or $46 per contract. And again, I would like to point out that we are trading with volatility at its basically 52-week low, so there's not a huge expectation of potential movement. But as we scroll down, you can look at the chart and you can see the price action has been slightly bearish. And keep an eye on key stock events. Keep an eye on this section. You see what we put out there today as far as stock events today in the general market. But also next week on the 16th, keep in mind that there is going to be the retail sales information that's going to be coming out. That's a report that comes out post this holiday season. That could add some further volatility or some potential volatility in names like Abercrombie, so we want to keep an eye on it, especially for you stock traders and option traders. We're going to have some time with this pick since we're going into March. But again, with the stock traders, be aware of these different pieces of information. As always, you can always email us at info@tradespoon.com, and you can ask us for help and use our useful training videos. And keep an eye on the recent daily pick. You want to see what our latest pick is and all of the other picks. And as you'll notice right here, there are check marks here. These are identifying high probability of success in the current market. And you always want to keep track of our past performance picks. As a matter of fact, we did close out of a trade today, or excuse me, on the 7th of January. It was the SWHC Smith & Wesson position. So keep an eye on this section to make sure that you see that we're actually closing out a trade and you can see the performance. All right, folks. Well, we look forward to seeing you tomorrow, and have a great trading day.